Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up slightly, about 0.04% there. On the S&P Nasdaq did the same. Semiconductor made a move today though, 1.7% positive. Looks like Dow, Russell, and transport printing red today. Biotech did get hit today, 3% negative. Healthcare down about 1.1%. And all these guys here, home builders, utility, retail, emerging market, these guys are all red today. Banks up, energy up. Bitcoin is up about 3%. Gold, silver, miners up a little bit. Dollar up, oil up, treasury bond down, VIX is down a little bit. Let's look at the S&P 500 ETF. Spider! 65-minute chart here, so... So this is where we close on Friday. And it looks like we actually slightly gapped down here. This is where we opened up this morning. Looks like we made a move to the upside on that first hour. But look at that mid-term moving average acting as resistance all day long today. This is not a good news. This is not what the buyers want to see. We do not. The buyers do not want to see that mid-term moving average also supporting the sellers, because we know that the short-term moving average is already and it's been supporting the sellers for a while now. And that micro-term moving average flipping back and forth, but it's been supporting the bears for a couple days. And now the mid-term moving average is making sure that price does not pass above that mid-term. And that's what happened throughout the day, is that there's a multiple incidents where the buyer's trying to bring it up and got rejected a couple times here. It looks like on the last hour though, we got that long-tailed hammer candle there. That hammer candle might be something. You see that we did see that hammer candle just about a week ago or so. And we also talked about the fact that if we can see a follow through from that hammer candle, there might be at least a day or two of a price action to the upside. Well, that hammer candle by itself, it could mean absolutely nothing without the follow through. I think the problem is right now is that we got all these moving averages acting as resistance. So going into tomorrow, I think there's still a lot of weakness. The market is gonna favor the buyers, and the bull's gonna need some sort of a jump start, right? The gap up or first hour strength to see that follow through. But here's a kicker though. Though my short-term and the mid-term moving average did act as resistance all throughout the day today, and it's been making the bears very confident last several weeks. If bulls want to counterattack and kind of let that confidence backfire on the bears, if they can see some sort of strength here, break above the midterm and the short term and stay above it at least first 2 hours of tomorrow morning session, I think there's a good chance bulls are going to try to retest that short-term moving average one more time. Keep in mind, last time bulls did try that. They failed miserably, as you can see here. We just threw that, what is that? The bearish engulfing candle right there, and bulls just couldn't even get it back up again. They just deteriorated it for a couple days. So obviously that short-term moving average, its trajectory is to the downside, and that kind of holds a lot of threat for the bulls. So bulls really need to kick up something here. If they let this momentum to continue, things are starting to look kind of dangerous for the buyers at this point. Let's check out that oscillator, see if we can extract any more information. So you see, this is what we've been talking about. We've been talking about this coiling setup, right? And this is the first time I've seen this coiling setup happening this long. I've never seen this happening for this long period of time. What it's telling us is that there's a lot of energy getting built up. Keep in mind though, we have lower highs in the price section and the lower lows. Yes or no? Yes. What does that mean? We are definitely in a downtrend in the short to midterm. However, look at this oscillator. Do we have lower lows? No. You see these? These are what we consider higher lows. So this oscillator is telling us something, that bulls might be up to something, they're brewing something, they're building something, they're strategizing something, and bears, you guys make sure this so-called plan of the bulls, you make sure that that doesn't happen, because if you let it, because why? We are in a primary and the long-term uptrend. We're dealing with the short to midterm downtrend, but we all know there were no uptrend in the primary term. So if you let the bulls hang around too long, and if you let the bulls let this oscillator continue to cultivate the higher lows, if you let the bulls utilize this to release the energy to the upside, bulls are not only they're going for 460 to battle with the boss bears, because last time bulls got up, faced the boss bears at 460. Remember the gap that was opened up back in January? Well, boss bears really made it painful, and bulls failed miserably. And so they're just they're feeling a little bit defeated here, probably more than a little bit. They've been crying in misery for probably an entire month now. But I think at this point, bulls want revenge. Bulls want rematch with the boss bears at 460. But this coiling setup is very suspicious right now. As far as the oscillator is concerned, going into tomorrow, yes, that oscillator hasn't crossed up yet. We're still falling. It does favor the buyers or the bears. So the bears, listen very closely. You want this oscillator come down all the way to the bottom of its band. If this thing curls back up, and if we get another higher low, while this price has been cultivating lower highs. But keep in mind though, you bears, you got the momentum in the last month or so. You can utilize it and make sure this so-called plan doesn't pan out. And this coiling setup, ladies and gentlemen, this coiling setup could also favor the bears. Because it's been building energy, you can release this energy to the downside as well. So very interesting week we're gonna face this week. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Good luck trading tomorrow.